PayPal co-founder Peter Thiel is the managing director of venture capital firm Founders Fund. Among its investments are Airbnb and Affirm, which both went public in the past year, as well as Stripe and SpaceX. He also co-founded CIA-backed big data startup Palantir, which went public via direct listing in 2020. Thiel, the first big investor in Facebook, has sold most of his stake in the social network, but still sits on the company's board. Thiel Foundation gives a small number of young entrepreneurs $100,000 over 2 years to skip college and pursue their business dreams. Thiel moved to Los Angeles from San Francisco in early 2018 after calling Silicon Valley a one-party state. The trove of IRS records recently uncovered by ProPublica has confirmed what many have always suspected: billionaires often enjoy a substantially lower tax rate than the average American. They do that by claiming losses and deductions that reduce their taxable income and by holding much of their wealth in investments which often aren't taxed on an annual basis. The most recent example from ProPublica's reporting, PayPal co-founder Peter Thiel. Peter Thiel, the billionaire co-founder of PayPal Holdings Incorporated and a vocal opponent of higher taxes, had amassed $5 billion in a tax-free Roth individual retirement account by 2019, ProPublica reported, citing confidential Internal Revenue Service records. Investment gains in Roth IRAs are never taxed, and the accounts are subject to contribution and income rules designed to limit them to middle-class taxpayers. In 1999, when Americans could contribute at most $2,000 per year to Roth IRAs, Thiel placed into the account 1.7 million shares of then-private PayPal, which were valued at just $0.001 per share. Within a year, the value of his Roth jumped from $1,664 to $38 million. Thiel, 53, later used his Roth to make highly successful investments in Facebook Incorporated and Palantir Technologies Incorporated, ProPublica reported, citing the tax records and other filings and documents. By 2019, Thiel's Roth held $5 billion spread across 96 sub-accounts. Thiel was within his legal rights to create the IRA at the time, but instead of putting in cash, he put in $1,700 in shares of his then-new startup PayPal. 1 year later, that $1,700 in shares grew to $38 million as PayPal became one of the biggest companies in Silicon Valley. And it just kept growing since. Many people were shocked by the sheer size of the untaxed nest egg, including Banana Capital founder Turner Novak, who tweeted, "With the gains on his Roth IRA, Peter Thiel could give $1 million to every American and still have money left over." Really makes you think. Ben Carlson, financial analyst and podcast host, also crunched some numbers to get his head around Roth's size. If you invest $2,000 every year into a Roth IRA for 1,267 years and earn 5% per year, you too can build $5 billion of tax-free wealth like Peter Thiel. He wrote, "You just have to think and act for the long term and be a vampire." It's not a coincidence that Thiel opted for a Roth IRA to hold his PayPal shares. Investments in a Roth IRA grow tax-free. In Thiel's case, ProPublica says that investment has grown to about $5 billion. Yes, that seems unfair, but typical Americans don't have to be Peter Thiel to take advantage of Roth's tax benefits. The rules really aren't different for Peter or any wealthy person and the average person that's out there, says Todd Scorzafava, a certified financial planner and partner at Eagle Rock Wealth Management in East Hanover, New Jersey. So what are those rules? Among other things, you'll have to wait until age 59 and a half to start pulling investment income out of your Roth IRA, otherwise it may be taxed or penalized. The account also has income limits and an annual contribution limit of $6,000, $7,000 if you're 50 or older. Those who follow the rules, tech billionaires or otherwise, reap Roth's rewards. Anthony Pompliano took some inspiration from Thiel's tax-free saving methods and analyzed some other billionaires' methods of lowering their effective tax rates. Pom started out his Twitter thread by writing, "Between 2014 and 2018, Warren Buffett reports $125 million in income. His effective tax rate was only 18.9%. Buffett, Bezos, Elon, and other wealthy Americans use the tax code to their advantage and keep more of their dollars to invest. Here are a couple of their tricks you can use." Perhaps Pompliano was typing quickly and forget the extra T on the end of Buffett. According to him, one of the easiest ways to lessen your tax burden is to contribute to your retirement account. There are two main types of IRAs, traditional IRAs and Roth IRAs. He wrote, "While both are tax efficient, traditional IRAs lower your taxable income now, while Roth IRAs reduce your tax burden later. The best part, you don't have to pay capital gains taxes when you trade in either." The rules really aren't different for Peter or any wealthy person and the average person that's out there, says Todd Scorzafava, a certified financial planner and partner at Eagle Rock Wealth Management in East Hanover, New Jersey. The news organization this month reported they obtained tax records on thousands of the wealthiest Americans covering more than 15 years. ProPublica revealed that billionaires such as Jeff Bezos and Elon Musk have in some years paid minimal or no income tax even as their fortunes have soared. It outlined the tax strategies available to the top 0.1%, including Bloomberg LP founder Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. With a traditional IRA, contributions are tax-deductible, meaning your taxable income will be lower the year you make contributions. Distributions in retirement, however, are taxed as ordinary income. Roth IRAs are funded with money that's already been taxed, so there's no additional tax deduction on contributions, but qualified withdrawals in retirement are tax-free. This makes Roth IRAs an especially attractive option for savers with a long-time horizon. Scores of Fava says, yes, a tax deduction now sometimes sounds great, but is that tax deduction going to outweigh the benefit of a Roth later on? Scores of Fava says, consider it this way, in the early and middle stages of your career, you'll likely be in lower tax bracket, so it may make sense, Scores of Fava says, to contribute to a Roth early on. Ideally, your investment will grow over time and you can pull money out in retirement tax-free. The PayPal shares in Thiel's Roth IRA grew in a way most of us will never see in our own Roths. However, anyone with a long investment timeline looking at you, 20 and 30-something investors, can still use their Roths as a holding pen for aggressive, high-growth investments. Where you're placing your assets can make a profound difference, Scores of Fava says. Where would you want to own a high-growth company? I'd want to own that first in my Roth IRA because the expectation of return is supposed to be higher and that's going to grow up tax-free. A diversified portfolio typically includes a mix of stocks and bonds. Stocks are higher risk assets that often drive bigger returns. Bonds are lower return boys that can help keep volatility down. However, young investors with decades until retirement may want to stack their portfolio with mostly, if not entirely, stocks and stock mutual funds. A Roth IRA may be a perfect place to park them. By opening and investing through a Roth IRA, you're growing your wealth over time. Your account balance may not have as many zeros as Thiel's, but the mechanism for accumulating your own level of wealth is the same. Then, come retirement, you can draw on that accumulated wealth, meaning at least part of your income would go untaxed, just like some of the world's richest people. Ron Wyden, a Senate Democrat from Oregon, in 2016 outlined a reform plan arguing that there needed to be a crackdown on massive Roth IRA accounts built on assets from Sweetheart inside deals. ProPublica's analysis detailed that at least 7 other current or former Bain executives had amassed IRAs worth $25 million or more, with 3 exceeding $90 million. Thiel, who is worth $7.2 billion, according to the Bloomberg Billionaires Index, was audited by the IRS in 2011. The audit was closed years later without Thiel owning any more taxes, ProPublica said, citing the tax records. If ProPublica's piece shows us anything, it's that a Roth IRA can be an incredibly powerful investment vehicle with the right investments, and hopefully it brings more attention to the fact that it's never been easier for everyday people to invest in private companies, not just the Peter Thiels of the world. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel, hit the bell icon for more updates and notifications. Stay safe, and we'll be back soon with another video.